Today's a bloody day for crypto. Double-digit losses across the board. And as I'm filming, it looks like we're getting even further losses, and it's only an hour and a half into the trading session. So what can we make from the markets right now? Well, I want to share with you some of my wisdom for this stage of the cycle, and hopefully the majority of us, including myself, don't screw up this opportunity, seize the opportunity. You know how the rest of the cycle should eventually play out. Today, I've got information on fear and greed. I've got info on the Bitcoin chart right now, and of course, the total cryptocurrency market cap, along with altcoins, the big ones, as we've seen a lot of those bleed out over the last 24 hours. So make sure you have hit that subscribe button. You're at your home of macro cycle analysis with me, Jason Pizzino. We're covering Bitcoin, cryptos, the stock markets, a lot of that in today's video, and of course the real estate cycle as well. So important to know where we are in the broader economy and the broader financial landscape. You guys know the deal. Link in the top of the video description. This free crypto and economic report is out today. Make sure you have subscribed right here, and you'll also be notified when our Ultimate Trader Accelerator is released to the public. Right now, it's only released to our members. All right, guys, let's kick it off with this quote. And I'm sure Warren Buffett was totally talking about degenerate trading of altcoins when he came up with be fearful when others are greedy, be greedy only when others are fearful. I think, or I feel in this case, that the markets are quite fearful at the moment. We're definitely seeing that, and I suspect we'll see more of my alerts pop up as the video goes on. As of course, Bitcoin, just in this trading session, hour and a half in, is down 1.6%. Yesterday had a flush out and then a higher close again above 50% levels after testing 50% and again 50%. And now it looks like it's coming back to test it one more time, whether we get a breakdown or not. I'll have a look at that in just a moment. But some of the big stuff here, obviously ETH and Solana, I want to have a look at as we are getting those losses across the board. So some other comments have popped up around what to do now about laggards and leaders, whether you should be selling out of laggards and trying to buy the leaders. When do you make that switch? Should you be selling and holding, sell, buy, or wait, as I've got here? And do you buy the dip, or what I've coined here is buy the breakout? So I want to show those particular options depending on what type of trader or investor you are. You can deploy those at particular stages of the market cycle. So just on this, obviously I wasn't talking about altcoins. There's no freaking way you'd even touch Bitcoin from what we know of Warren Buffett, but it's the same situation when it comes to altcoins. Be fearful when others are greedy. And of course, I get pretty fearful when the market goes absolutely ballistic, especially at peak euphoria, and it starts to break out really fast. Like you can see with this particular bar here in February, that was really starting to put on a lot of hype in the market. And so I start to get fearful. It doesn't mean that I sell out of everything. It doesn't mean that I just stop buying absolutely everything, because there are times where it's good to be buying on the breakout as well. But this is a time where I become more of a defensive player in the market when things get out of hand. And that happens in the stock market, real estate, everything. When things get really out of hand, you see things get really hyped, then I want to play a defensive game with my money as opposed to offensive when the market is at some lows. And if you guys have been following, I know many of you have been as well, I talked at length on Twitter and on YouTube about this whole period. I don't claim to know exactly where that low is going to form. I just get a bit of an idea of around where those lows are, and I try to buy up whatever I can when I think the lows are on. And then I also like to buy when the market starts to break out as well. So I have two different strategies that I deploy here, and that's what I'm talking about when it comes to this: buy the dip or buy the breakout. So it's going to depend on whichever market you're also trading and what type of trader you are, as I've said before. So that's what we're looking at today: fear and greed, where to buy. For the stock market, where are we in the overall picture? As I said in the intro, we need to still get an idea of where we are in the financial landscape. So a quick review of the stock markets as they hit, you guessed it, new all-time highs again on the back of more fear in the market. This is the Fear and Greed Index from CNN Business here. It's at fear. Yesterday or last week was at fear, and I think yesterday as well was at more fear. So it's basically been tracking around the fearful zone for quite some time. And so again, it's basically putting this plan together: be fearful when others are greedy and greedy when others are fearful. Now, there's another thing here when we're looking at some more of the data where that money is. Are you more likely to increase or decrease equity exposure over the coming days and weeks? So this was put to JPM Institutional Weekly Survey. There's virtually no risk appetite to deploy fresh capital into equities. Investors continue to show no love for stocks in 2024. Does that sound fearful or does it sound greedy? I'll let you comment down below. Fearful or greedy? What do you think of the overall landscape when it comes to the stock market? Obviously, my opinion is I think that sounds fearful. So even though these markets are hitting new all-time highs yesterday, new highest daily close in history, of course, I have to keep repeating this because the market keeps putting on new all-time high closes, new all-time high prices. Not every day, but over the last few days, basically all but one day, which was Friday's action. So I think the market is still fearful, yet it keeps climbing. So what does that tell us? To me, it tells me that this move is not over yet. If we can learn anything from Bitcoin and its extreme, or Bitcoin and cryptos, and its extreme emotional roller coaster ride of the participants who are basically mostly new traders or investors, well, then we can learn that the markets really need to get to a point that everyone is talking about it. As you remember from at least the first 2 weeks of March, lots and lots of people were talking about it. And as one of the viewers, you guys pointed out, this particular top here, we're going to come to know it as the Drake top. That's when Drake posted on Instagram to 160 million, however many he's got on IG. It's 160 million people. He posted a story of Michael Saylor and Bitcoin. That doesn't happen at this period here. It always friggin' happens at the tops. And we are a long way from that in stocks. If you had been in the markets in 2021, maybe even back at 2006, 2007, if you're that old like myself, everyone was talking about stocks and how they were all making money from stocks. And more importantly, at the peak of the last cycle in 2006-07, they were all talking about all the money they were making from real estate. So if you've ever seen the movie The Big Short, everyone is talking about all the money they're making. The brokers in real estate, in the movie there was the strip club clientele and the people in the strip club stripping, all talking about all the money they're making. We are not in that situation, at least from what I can see. Although you've got a few stocks that are leading the charge here, like Apple at new all-time high closes again yesterday. Well, I'm not hearing about people talking about the stock market. I'm not hearing about them making all this money. All you're seeing is the prices continuing up, even though the institutional clients are at one of their lowest levels of exposure, or wanting to put exposure into the market that we've seen in about 3 years. So I think what's going to happen next is that they'll continue to get squeezed into the market, and they'll have to start to deploy some money into the market because they're not making money for their clients. And eventually the clients are going to catch on that, why aren't you making me money when the stock market is now up in 2 weeks, is now up 6.5%. And if you look at it from the beginning of the year, roughly around here, it's up nearly 16%, and they're not making the money. They're not deploying the money into the markets because they're all scared of a potential collapse. And so if you don't have all of the money into the markets, then it's pretty hard for the market to collapse, because anytime you get any sort of corrections, like we have seen, you'll typically see more of that money get deployed into the market, which then goes back to our old mate here, our degenerate friend, Warren Buffett. Be greedy when others are fearful. So you'll start to see some more of that money get deployed into the market when you see that fear come in. And as we can see from the reading, well, the stock market is definitely in some sort of fearful state, even though it's at new all-time highs. And we've heard about this before. It's probably one of the most hated bull markets because so many people missed out on this, and it continues to climb higher and higher. Same deal for the NASDAQ, new all-time high price, new all-time high daily close. it just continues on with this charge into new fresh prices here. 20,000, first time in history it's hit 20,000 points. Now, in terms of the real estate cycle, where are we overall? Maybe you know my opinion, winner's curse phase. I believe we're in the winner's curse phase now. This, as you can see here, we are here. I posted this over 2 years ago in January 2022. Okay, so we're looking at somewhere in this sort of choppy range, which we now can see looking back on it 2 years ago. That's precisely where the market was. It was in a choppy range, and read this at the top. That's the property and economic cycle. Just says property there, but it's the property and economic cycle. And we know from the US, Australia, Canada, UK, roughly they were going through their peaks, a pullback, and now for Australia, it's up like 16 months in a row, real estate. You're basically seeing a lot of headlines. It's just about real estate, how people can't afford property. It's getting too expensive for the average person to afford it. And the same deal in the US. You got several months, many months in a row of gains on real estate. So I think we're at this sort of early stage here of the winner's curse. And before you know it, more and more people are going to be talking about how they're making money with their real estate, how easy it is to be pulling equity from the other real estate that you got and then going to deploy that into the markets. And what I saw on X yesterday was people wanting to take out loans against their equity. So I put a little poll out here yesterday. Show of hands if you've borrowed against your home equity to buy Bitcoin or crypto. Fortunately, I think the majority of the guys watching this are not going to get wrecked by borrowing against their property and throwing it into cryptocurrency. That's a pretty good thing. Obviously, I'm not your financial advisor. It's not something that I would ever advise to do for the majority of people, because we know the majority of people lose money in the markets, and the last thing you want to do is lose your home to some garbage altcoin or cryptocurrency for the sake of trying to make more. I think we will see more of this happen towards the peak, where either people are borrowing against their homes to buy crypto, or even vice versa. They'll have crypto gains and they'll be borrowing against their crypto, maybe their stock portfolio, to then go and buy real estate, borrowing against it, that is. And then when those prices come down, and it's only a matter of time, I think they would come down after some significant peaks, they have to repay those loans. Well, how are they going to get that money? They got to sell their property, and then you get that big snowball effect. And that might just be one particular area of the financial market. So stay safe as you get into the peaks. As I talked about earlier in the video, getting into a defensive state as the markets rise. And I'm not saying we're in that state now, obviously not. It's down 1.6. There's a little bit more fear coming in this morning with single digits in the last hour and a half, but double digits overnight. Then I think it's getting to a time to be playing more offensive in the markets if you have that risk appetite to get into your cryptocurrencies in a particular way, as I've pointed out here. Buy the dip or buy the breakout. So opportunity, as I said in yesterday's video, right here, it's opportunity that I think we'll have a pretty good chance here over the coming months. Opportunity to enter comes from fear, and then opportunity to exit comes from the greed. So looking to exit in that extreme greed, because there's a lot of liquidity, and there's an opportunity to enter when there's a lot of fear in the markets. It's going down, down, down. So that's a look at the broader picture here. I've covered the stock markets. We've looked at the cycle where we are at, or at least in my opinion, where we are in the real estate cycle, which is why I still think there's more time to go to the upside, and we've still got a potential final leg here for Bitcoin and cryptos after they find their base and build out of those lows. The stock markets are getting taken higher by Apple, by Microsoft, at new all-time highs again. So we've got to keep moving this every day to new all-time high prices, new all-time high closes. Nvidia also hit a new all-time high price, closed a little lower yesterday. And the important point here that I make often is try to buy the leaders and try to avoid the laggards. So that gets on to the next point. When should I sell my laggards and buy my leaders? And why I bring up the Dow Jones here is because you can definitely see that it's lagging the S&P 500 and the NASDAQ. This is 30 companies in the US. The S&P, obviously the top 500, and the NASDAQ is the top 100 tech stocks in the US. So those are leaders. Those few companies are basically leading the charge. And if you're in those majors, Apple, NVIDIA, or have been for several months or even for several years, you're buying those leaders, whereas something like the Dow Jones is a clear example of why the laggards lag and why the leaders lead, and you're going to get better returns from the leaders as opposed to the laggers trying to buy up these dips, and then hopefully they're going to boom and outperform everything else at some point in the future whenever some fundamental thing comes out. You know, it's always the story. The Dow Jones is made up in a different way to the S&P and to the NASDAQ. It's weighted on the price of the stock itself as opposed to the market cap of the stock. So United Health is $490, so the most weighting goes to this one here, even though it's not leading like Microsoft or like Apple. That's a story for another day. It's basically just an example of laggards lagging and leaders continue to lead. So hopefully that penny is dropping for a few more people. They generally write, yes, the light bulb went off and buying leaders is probably a better way to go than the laggards. It just makes life a bit easier. BTC, here we are again at $65,000. As we were on the way up, we're looking at price ranges every $2,000 or so. And while this fear in the market is going on, as we can see by the, thank you for the recommendations here, guys, the coin market cap crypto fear and greed index, which I finally found, is still sitting somewhere around 53 or 54. So it's in a neutral territory here as it brings in the top cryptos and most likely Bitcoin in there, and blends in all of the other info with their own algorithms, right? So it's probably higher than the majority because you've got Bitcoin and Ethereum and Solana in this reading, which haven't broke down significant levels, and they still maintain pretty close to their old all-time highs, as you can see from Bitcoin here, whereas the crypto fear and greed index is sitting in greed. It must be putting a lot more weighting onto Bitcoin than other cryptos. So in terms of the moves themselves, a breakdown of 65, I'd be looking somewhere back towards 63 down to 60. So this is this little white line here. You can see going across the chart there, 63K as a potential area to test, and then back down to this previous low at 60. So pretty straightforward from this point for Bitcoin. It's still in its trading range. It is now 96 days below the old all-time high. You got some meme coins starting to test some areas here, some price levels. And in terms of our signal, another one going off. In terms of our signal, we're looking at the price of Bitcoin being underneath the old all-time high for roughly 4 to 6 months. So I think at this stage now, we are likely to see Bitcoin, as all the alerts start to go nuts, as it breaks down probably from a key level, that is probably likely we'll see Bitcoin underneath the old all-time high for that sort of roughly 4 to a 6 month period. So let's clear up some of these alerts. Let's have a look at the total cryptocurrency market cap to see what is going on from this point. To the downside for the total cryptocurrency market cap, I'm looking at 400 billion. You can see here the 50% level from that low to that high, and back to that accumulation zone, which I don't think we're going to get to, but it's important to keep that there anyway, roughly about that 300 billion. Now, this is just going to keep going off throughout the video, but that's life. This is what it is when you've got your alert set. We can see that the 50% level, 400 billion, that's what I got there. Now, this red line here, I'm looking at as this particular move to the upside. So it's basically just a copy paste there. And then wherever this low comes in, we'll smack that in there and then look towards that time frame. So as I mentioned with Bitcoin and the time frame here, that sort of 4 to 6 month period of time underneath the old all-time high would take us out to close to around that September period. So yesterday's video, videos before, as a recap, I'm looking at that Q3 of 2024 as a area of a potential low, if not, it comes in June, and then that move to the upside in Q3. Whether we break out to new highs for Bitcoin or we start to break significant levels to the upside for Bitcoin is going to be the question. Now, when that happens and we have the breakout, I doubt this is going to be the new all-time high here. This was August. So let's bring this across to somewhere around a time frame of 23 to 26 months based on the previous cycle. You got the low to the first breakout here of the accumulation. So I think that's an important time frame to look at. Otherwise, we can look at the breakout to, there goes Solana below 130. And we take out Solana at, the top here at 26 months. So bring this across to 26 months. There it is. and throw another horizontal line in here. That would take us out to about February, so Q1. As we're looking at Q4 2024, Q1 2025, I think that's probably got some pretty good movement for a new fresh high price. So if I throw this in around there, you can see something like that would be similar to the previous move. And all of this fear of the market heading down would be forgotten by Q4. I'm going to throw my neck out on the line here. Look at the alerts going off. Double digits. We just hit it. So I'm at an hour 45 now into the new trading session. Markets are down double digits. Look at this altcoin market go ballistic. So this is typical, I've seen anyway, of times where we see the opportunity to enter from fear. Not saying go out and buy absolutely everything now, because that would be potentially silly trying to buy all these dips. However, you might see some lows begin to form as well around these periods. So I'm looking forward to that in terms of where we find those strong versus weak cryptos. So I think that's probably a good place to move on to the strong versus weak cryptos. As we've covered the timeframes here, the price ranges being around 400 billion to these lows here at 340, back to that accumulation zone of 300, which is probably a little bit out there, but nonetheless, it's on the chart there. So we'll keep watching that. So right now we've got 3 months down on the altcoin market cap. ETH, here it is. It's at 3,390. So it's barely just taken out this low on the 14th at the moment, maybe a little more at the once this is posted. But you can see back to the previous lows. 13th of April, that was the higher low that I've been referencing on X and on YouTube as a potential strong area for cryptos to hold above, and it's still above those current lows there. So keep watching the April lows and then take it back to the June lows to figure out whether your altcoin is strong or is it weak in the current market structure, this current market position. If all else fails, you've got the previous accumulation zone, and those levels are around September and October of 2023. So mark out where those prices are. And I've got a couple more examples to have a look at. But for now, I mean, Ethereum still holding up there in terms of percentages to the downside. In the past, it's done 76% down. It's done 67% down when there was a less liquidity in the market. That is something to note for new altcoins, which would have less liquidity. For now, ETH has done, it's roughly 30% moves from the tops to the lows. And this previous one is about 47%. So I've got 47, 30%. Currently, ETH's moves is 32%. So if it was to do something similar, you go top down to these previous levels, there's 34, down to these lows, 47. So it's still well within this particular type of range. Now, I'm not saying it's going to do 47% at all. It still hasn't even broken the April low. So it's in a stronger position compared to other altcoins, especially in this double-digit bleed out. Almost same could be said for Solana at this stage. It just broke the 50% as I'm recording this. So I think this is kind of exciting to record during the action itself. Now, you got the lows here in April at around 118, the major 50% at 109. And I think worst case scenario, I would not want to see Solana break $80. I think a break of $80 could spell pretty significant disaster for Solana in the coming altcoin season, whenever that may be. A break and closes underneath would be bad. A test of that and then closes above, that's fine. You can see that you get some liquidity scares, but then closes above those levels are fine to bring it back to life. Okay, so Solana is still in a relatively strong position compared to a lot of other altcoins, which you guys know of as being this list: ADA, AVAX, ICP, HBAR, throw anything else in there, XRP, why not, right? Those things are pretty damn weak, whereas these are still holding up relatively well, even in this fearful time. So looking at those strong ones, where would I look to enter if I wanted to buy the dip or buy the breakout? Personally, I don't like the buy the dip opportunities. If I had to, and I really, really don't like to do the buy the dips because the dips keep on dipping. And then before you know it, you're left with pretty much no dip money left. And you're basically starving on the sidelines until the market comes back and then goes into a breakout into new fresh prices or takes out some significant price levels, if it ever does. Otherwise, you sit on the sidelines starving because you bought all the dips, got no money left, no more food, and you're screwed, right? If you had to get some of that tiny little bit, you just wanted a taster of the dip, then look towards roughly around the lows to buy some dip, even though it might not be the final low. Then I look to somewhere around 60 to 80% down. So you can see that percentage there. You can see around 76. So around that 60 to 80%, just look back to where those significant support levels are. Reason being is that in the past, and I've got the examples on ETH that I had to look at. We've got examples on Solana that we've looked at before. There's 80% down in the past, leading into that final big pump of the cycle, where you get this big altcoin season happen. It did do 80% down. Link, this has done 90% in bear markets and multiple 70% not in bear markets, basically heading into new fresh highs. So it can do these sort of 70% moves. The reason I do look for those 60 to 80% is because that's what altcoins have done in the past. And so look for something that is more conservative, knowing full well that it could go to 80%. And if it did go, stick with me, if it did go from 60 to 80% down, that is almost a 50% loss. Sometimes it's around sort of 35, sometimes around 40%. If you were to buy at 60% down from the high and it went to 80% down from the high, that little bit of a 20% move in your portfolio would look like a 50% loss. That is a really, really important thing to know here, because it could look so terrible on your portfolio. Yet when you look at it from a high, you go, oh, it's not too bad. 60% down or 80% down, I can buy the dip in this area. That is going to be some big swings in your portfolio. So pay attention to that if you choose to buy the dip, which is why I talk about, I don't really like to do those buy the dips, with a few exceptions. Bitcoin is one of those. So if you don't like that, if you're not one of these people here, and I don't want to buy the dip and I want to buy the breakouts, let's talk about that, and also selling the laggards to buy the leaders. In the move to the downside, not always, but you could potentially see, well, you often see some of the leaders not falling as much as the laggards. But if you're doing it within the same market, so we're not trying to get too cute here and try to find things that are doing only 3% down. Meanwhile, the rest of the stuff's doing double digits. There's 9, 13, 11 here. You just want to sell all your FTM and go and buy Binance. You're still going to be losing, but if you're buying in the same market, maybe it won't be as much. So that's something to keep in mind as well. And the time to sell the laggards and buy the leaders is within that same market, in my opinion, from my experience. If you try to sell too late, wait for those to drop and they come back the other way, you might miss out on those opportunities. So you can do one of two things. What I like to do, I try to do it in the same market, but your other option is to basically sell now and then wait to see where else this goes and then try to buy lower. That is far more difficult, which is why I just like to keep it in the same market if that's what I'm doing. And that would be to reconsolidate my portfolio. So basically, just to bring the portfolio together, get rid of some of those losses or those losers and find some of the winners. So keep that in mind if you are looking to get in and out of the market, when to sell the laggards and buy the leaders. Option is to do it within the same type of market conditions and potentially find something that is stronger than the losers that you might be in or the laggards that you might be in. Otherwise, if you're trying to time the market, selling when you think is the right time, waiting to see if it goes lower and then try to buy lower. Now we've done buy the dips. We have done selling the losers to the leaders or the laggards to the leaders here. Now buy on the breakout. Really, really simple. So I'll keep it nice and short. You've got the move to the upside as price breaks out of what I like to use as the swing chart. Then I'll be looking to enter on those breakouts. So you've got an entry right there. And if you want to get really cute with it, get nice and close like our traders do, then you can look at the swing chart itself and buy on those breakouts of the swing or multiple bars themselves in that swing itself. You can put it onto longer term timeframes like on a weekly chart here and then start to buy those bigger breakouts to the upside. That's as simple as it is for buy the breakout, but you need to have a plan for that. Gann swing indicator is a fantastic use or tool there to use for those breakouts. Otherwise, check out TIA Premium, learn more about trading and investing at this period. probably put something like, don't screw up this opportunity. I think this is a pretty damn good chance while these markets are where they are with this fear coming into them, more losses to the downside for many, and they're going to be scared out of the markets. But I think from here on out, it's about patience. Once you get this much sort of fear in the market or losses on cryptocurrencies, I haven't seen them bounce straight out of these levels. They do take some time to wind up again and start to work their way higher. But if you've got that patience somewhere around Q3, late Q3, sometime into Q4, I think you are going to be over the moon that you took this time to understand what the markets are doing and to position yourselves ready for that period in maybe 6 months' time. I think it's about patience. Check out TIA Premium. There will be a special on this week for Aussies, end of financial year. Subscribe to the free crypto and economic report. I'm glad I could share this moment in time with you as we see a lot of these altcoins dump double digits during this particular filming. Like and subscribe. I'll see you back here at the next video. Until then, take care and peace out.